Well, hello, let's get into Think or Swim. It's a basic combo building time. I've got a couple things I want to talk about. Joe with you here, by the way, from Maverick. So, there are a couple of different ways to build basic combos. What's really cool about the ThinkorSwim platform is it can build them for you based on the strategy or the combo that you're looking for specifically. So I'm going to do a basic navigation. We're going to start with using the ThinkorSwim preset combos and how to kind of navigate it. It's a little tricky. I actually struggled myself to kind of figure out when it comes to how many expiration cycles out versus how many strike prices with, so on and so forth. However, I'm going to show you how to build your own custom combo. A little quick cheat. Holding down a control button makes this much, much easier if you already know the combo you're looking for. I do not work for ThinkorSwim. This is my opinion. This is how I use it. This is to help you guys out, my Mavericks. Take it for what you will. Let's jump in to the software. Now you can see the first thing that I did was select the greatest stock ever in the history of the world, Microsoft. That's not true. I selected Microsoft because it has weekly expirations and a lot of strike prices for this example. I don't really give a crap what they're up to. I haven't even checked the chart. That's not what this class is about. However, if you guys did check the chart and you are looking for a very specific combo, we can use this options chain line to get there. From left to right, the first one is filter, then we have spread, and then we got layout. Layout's got a couple of defaults that I use. I'm very simple, delta, gamma, theta, vega. Yeah, it's fine. It's got your bid ask. Or we can customize it. I'll get there in a second. But the filter is something pretty cool. So let's say that we've already broken down Microsoft and we realize that we want to do something very specific. I'm going to go ahead and make it up. I want to do a put spread in the next 10 to 30 days, pretty much at the money. All right, why did I say that? Because it just sets us up for this. So we have side, open up a side. We can do just calls, just puts, or we can do both. I said puts, so I'm going to select that. Expiration types, we've got regular, quarterly expiration, weeklies, or all, right? I wanted to do something 10 to 30 days out, so I might want to see regular and weeklies. So I'm going to go ahead and select those. Deliverables, don't really care about. It's a non-standard, it's a mini. What are deliverables? If it pays a dividend, if it's got a one-time payment, if it's got a stock split, if it's got a buyback, that's where you're going to see these. Just leave that pretty much standard unless you're specifically looking for those things. Days to expiration, I said 10 days on the minimum side. I'm going to go to 30 days here on the max, between 10 and 30 days. And then we go to strike prices. Now strike prices is pretty easy to do. If I look up here, follow my cursor, I've got last prices at 276.52. So this stock's trading about 275, 276. Well, let's get a little wide. Let's go about $100. I'm going to say $200 to $300. Whoa, yeah, let me go ahead and get rid of that max. There it is. And hit enter. And then I can choose the exchange. That's right. If you guys want to sit there and think that the AMX has got better bid-ask spreads than the NASDAQ or BATS, go for it. I don't care. I'm just going to keep it as the composite, which goes to all and finds me the best price. Now that I've got those, you can see up here, it says puts, expiration types, regular, weeklies, days expiration 10 to 30. You can see it. It's nice. We got that first breakdown, and it's already reduced our options chains. Take a look at that. We've only got 3 choices. 15 days out, 22 days out, 29 days out. Now, I can go take a look at those, or I can take my next step on this top line and choose something specific. So I've got all types of combos here. Single, vertical, back ratio, calendar, diagonal, spread. I don't want to read them all. You guys can see them. I can do these basic, or I can get a little deeper into this called deep and wide, right? So if you go deep and wide, I can choose, let's say, I want 2 strike prices apart, 3 strike prices apart, 4 strike prices apart. I want to see 2 months apart if I'm doing a diagonal or calendar, things of that nature. Now, I'm going to suggest this because I've done this a few times. It's always best to see what's available on what's been given to you before you choose this. What do I mean by that? Well, here's my example. If I open up 15 days out, I can see that I've got $2.50 strike prices. 270, 272 and a half, 275, right? Now, if I go to the regular expiration, I also have $2.50 strike prices. However, if I get to week 4 or 5, or I should say 4, it goes to $5 strike prices, doesn't it? There you go. So if I want to spread these deep and wide, let's go back to this, and I choose, let's say, 1 month 2 strike prices, with September 9th and September 16th, I'm going to get $5 increments, right? Because they're 250. So two 250s is $5. However, once I get to September 23rd and it goes to $5, I'm going to get $10 steps. This is where this gets tricky. I told you guys this on the intro, right? It gets tricky and it takes a little bit of playing around. But if you're specific to what you want when it comes to expiration cycles, you can usually get around this. So I'm going to go ahead for fun and just say I'm going to go 1 month because I am 10 to 30 days, which is 1 month. I want to do a vertical spread and I'm going to do 2 strikes. And I'm going to show you what I'm talking about. So if I go to the weekly here, it gives me the combo 257.5, 262.5, 260, 265, 262.5, 267.5. So it's giving me the $5 increments that I'm looking for. Now if I go all the way to week 5, I'm getting 230, 240, 235, 245. I'm getting $10 increments. I'm not getting 5. The reason being is because 250s aren't offered for that expiration cycle. I get this question a lot. All right. Long story short, we can get anywhere we want when it comes to just playing around with these options chains kind of navigation areas, or I should say these filters. The last one I'll show you, this is easy. I like to use the Delta Gamma Theta Vega. You can see it's basically a default that ThinkorSwim uses. Just like any sort of column, I can customize this. Let me move this over here. You can see that we've got columns at the top. You can do whatever you want. I can do my customizable columns. You can see all the way down here. Let's go down to the defaults. Delta, extrinsic value, open, close, last, size, anything you guys want to do. You just move it over, right? Select it, hit add item, remove items if you want to get rid of these. And you can play it that way. It really just depends on the combo you're looking to build on the ticker symbol that you want to build it on. I don't think it gets any simpler than that. Now, folks, once you find what you want, let's go ahead and get to, let's go 20, no, let's go 15 days out. And I wanted something in and at the money. So I'm going to look at a, what are we at, 276.71 here. Let's go ahead and do the 275. Once again, it jumped $5 here because it didn't offer the that 277.5. I wanted something pretty much in the money and something slightly out of the money, so I'm going to do my 275 280. All I have to do is go over to the ask and click on it. It'll give me the buy order and it puts it down to where we can actually analyze this. Now I'm going to minus this down to 1. You guys have seen enough of these videos to know that I like easy math. And then I'm just going to go straight up here to the risk profile and I can start to play with this. There is my bearish vertical spread anywhere from 10 to 30 days out with 2 strike price skips, 2 to 3 strike prices, right? 275 by 280. It gives me that nice $5 and I'll work forward from there. Now from here, guys, we can analyze it. There it is. We've got our vertical spread to the bear side using puts, and it's got all the selections that we liked about it. It's awesome. However, I'm going to show you something a little bit easier and the way that I like to do things. So I'm going to go ahead and close this spread. Just hit the X button there. I'm going to go back to the add simulated trades. I am going to kind of close these options chains here. And once I do close these options chains, I'm going to remove my filters, right? So I'm going to go back to here and I'm going to hit reset. I'm going to go over to the vertical here. I'm going to hit single and go kind of to start over. Now, why I want to show you this is because this is how I build my options. I usually already have an idea of what I want to trade based on the top-down approach or the work that I've done on the chart itself. Now, very simply, I know how to build a vertical spread versus a diagonal versus a ratio versus a butterfly, so on and so forth. So if you guys are already there, this becomes a neat little cheat. So I'm going to go to that same Expiration cycle, well, I'm going to go to the 22nd here. Let's go regular expiration 22 days out, and let's say that this time, well, let's make it more fun. Let's do a diagonal spread, meaning I'm very comfortable selling that $80 strike price call-wise in the next 8 days. So I'm just going to go ahead and open that up. I'm going to hit left click or just regular click on the sell side. You can see that it brings up my sell order. However, I want to buy, because I'm diagonal call now, I want to buy something a little bit in the money a couple of weeks past that. In this case, I'm going to look for 22 days out versus selling 8 days. Now, since I am selling the 280, I'm going to go ahead and buy something at or in the money. In this case, the closest to the in the money, let's do the 277.5. Let's make this a little bit more aggressive. So I just hover my mouse over the ask and I hold down Control and I click, and it creates, you can see down here, a nice little diagonal spread. I always minimize this down to one contract. By the way, folks, I haven't done a video on this, but you can actually default that. This is defaulted to 10 contracts. You can change the default in settings. Now, what I've done is by selecting and knowing what I'm looking for and holding down the Control button, I can build the specific combo. This is what I do 99% of the time. And for most of my traders, they'll do the same. However, if they're looking for an area or an idea and they don't know the specific combo that they want, it's nice to use those options chains filters up top to give you more of an idea, maybe 2 or 3 ideas on how to trade. So from here, very simply, just go over to the risk profile and you can see I've got myself a nice diagonal call spread to the upside, and we'll move forward from there. All right, guys, super easy video, real quick, just to give you an idea how to navigate this. Please, you're going to go out there and try this 1,000 times. It does take some work and some playing around with. You guys, I wanted to show you the little bit of a hiccup because some expiration cycles have more strike prices than others, and if you ask for the deep and wide, meaning I want to see wider expiration cycles or wider strike prices, you might not get them because 1 week might offer dollar strikes and then the regular expiration only offers $5 strikes. That's going to vastly change that outlook, so just don't be too confused when it comes to that. All right, hopefully this was helpful. Thank you guys so much for joining me, and we'll talk to you next time. Bye, everyone.